Hi, I'm Roger Montgomery from the Montgomery Fund, and welcome to this week's video insight. Well, since we started warning you of a possible recession in Australia and the end of the mining boom, just in the last few weeks the stock market has fallen over 9%. Many investors are now looking for bargains, and we believe some are starting to appear. But before you dive in, here are some things to consider. Is the worst over for the recession that is now occurring in the mining space? Let me give you some anecdotal evidence to suggest that it's not. We heard recently that one West Australian stockbroker was advertising for a mining services analyst. Now in past years when they'd done this, they received very few applications and couldn't fill the position. We now understand the latest advertisement has been applied for by over 80 mining and mining services engineers. It seems that the writing is on the wall. We also know that there's been a proliferation of mining services companies. Now, I've talked about this quite a lot in the past because we've been witness to many of these companies as they floated on the Australian Stock Exchange. What we didn't know was quite how many mining services and mining accommodation providers there actually were. You might be surprised to know there are more than 800. So the extent of the impact of this slowdown will be much more seriously felt than what we originally anticipated. We also know that many stockbrokers are finding times tough in WA. So the financial services sector is being impacted as well. Now, why is this happening? Quite simply, small mining companies can't get funding, and large mining companies have brought in management that are focusing on cost cutting rather than acquisitions. This means that less business for stockbrokers and less business for investment banks. Of course, in time, lower prices will bring out private equity and there'll be more mergers and acquisitions. But that time isn't yet. Now, we recently listed on the blog 127 downgrades, in fact 128 if you include Cochlear, and 129 if you include two of their last downgrades. We were criticised for this list because it was dominated by mostly mining and mining services companies. We also didn't put in the upgrades, but let me assure you the upgrades are far smaller in frequency than the downgrades at the moment. More importantly, it looks like the bearishness is spreading elsewhere in the economy, and this month we've seen a record number of insolvencies reported in Australia. Now, as people fear recession and ahead of a recession, the stock market tends to slide. So we think there'll be more bargains available. And in fact, we're delighted to see, because we've got 40 or 50% now in cash in the Montgomery Private Fund, we're absolutely delighted to see many of the high quality companies that we like moving back towards and below their intrinsic values. We hope you're noticing this too, and I look forward to seeing you next week. Be sure to follow us on Facebook and Twitter.